Hello, I'm Mark Wilson, Financial Planner for Christy Capital Management. Today we're going to talk about the FERS Special Retirement Supplement that I will refer to as the SRS. It's a supplement only applicable to FERS employees who meet the qualifications. The intent of the SRS is to bridge the gap of your retirement under a full pension until attaining the age of 62. The calculation of the SRS is based on your years of FERS service and your Social Security benefit at age 62. The SRS is a FERS benefit and in no way impacts your Social Security benefit. However, your Social Security benefit at age 62 is used in the calculation. If you're retiring with a reduced pension under the MRA plus 10 provision, you would not be eligible for the SRS. The SRS is subject to the Social Security earnings test. We will discuss the earnings test momentarily. Generally speaking, the SRS will receive no cost of living adjustments in retirement. For instance, if you begin withdrawing your SRS at age 57, you will receive the same amount every month until you reach age 62. The SRS will end at age 62 regardless if you decide to begin drawing Social Security or delaying into the future. Next, we'll review the SRS formula and some examples of the calculation. The SRS is a percentage of your Social Security benefit at age 62. The percentage is derived by your number of years of FERS service divided by 40. You only use your FERS service. You do not use any military service, even if you made a deposit to buy the military service back. Let's look at an example of a FERS employee retiring at age 56 with 30 years of total credible service. The 30 years of total service is comprised of 25 years of FERS service and 5 years of military service. The formula for SRS, remember, does not use military service. The Social Security benefit in this example at age 62 is estimated to be $1,200 per month. The calculation is the number of years of FERS service, which is 25, divided by 40, and that result is multiplied by the Social Security benefit at age 62, which in this example is $1,200 per month. Therefore, if you divide 25 by 40 and multiply that by 1,200, the result is $750 per month or $9,000 per year for the SRS benefit that you will receive in retirement until age 62. Now let's discuss the Social Security earnings test that applies to your SRS. The earnings test is very important to understand for a FERS employee, especially if you plan to retire prior to the age of 62 and would like to work elsewhere in retirement. The earnings test could drastically impact your SRS depending on the amount of earned income received from post-retirement employment. So what is considered earned income? Earned income comes from a post-retirement job where income is earned based off your work. Therefore, your FERS annuity, your TSP draws, any other investment income do not apply. For the general population FERS employee, in other words, non-special provision employees, general population only, the earnings test will apply in retirement from your minimum retirement age, also known as MRA, to age 62. The applicability of the earnings test varies slightly for the special provision employees, such as a law enforcement officer, air traffic controller, or firefighter. They can retire at earlier ages. The earnings test will not apply for a special provisions employee until they reach their MRA, or minimum retirement age, as outlined in the FERS handbook. MRA is based on the year you were born and is between the ages of 55 and 57 years old. Therefore, a special provision employee, say they retire at age 50, they can work and earn unlimited income, and the earnings test will not apply on their SRS until their minimum retirement age is attained. So how does the earnings test work once it applies? There's an earnings limit that is designated each year. The current Social Security earnings test limit is shown on the slide. The rule states for every $2 earned above the annual limit, you lose $1 of your SRS. Let's review an example for clarification. This slide shows a FERS retiree with a SRS of $9,000 per year and a post-retirement job earning $10,000 per year. Well, $10,000 is under the current annual limit for Social Security earnings test, so there's no reduction of your SRS. You draw the full SRS and you keep the $10,000 in earnings. Now, the next example, we assume you earned $20,000 a year while drawing your SRS. Now you have exceeded the current Social Security earnings limit. So for every $2 that you're over that limit, you lose $1 of your SRS. In this example, the SRS reduction is calculated by dividing the earnings in excess of the limit by 2. The last example illustrates, since you have exceeded the earnings limit by more than twice your SRS amount, you lose all of your SRS benefit. As part of your retirement planning, you should consider these rules if you intend to work and earn money in retirement, along with drawing the SRS. For more information on this topic, please contact us at Christy Capital Management at 866-331-7749.